Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I've bidden a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Monday edition of Benzinga's Pre-Market Prep. Spencer Israel here with Joel Elconin and Dennis Dick. On the show today, some earnings to discuss. We want to talk about a special dividend being paid this morning as well. And our guest today will be Chuck Self. He's the CEO of iSectors. He'll join the show at 8:35. Joel, why don't you recap the weekend in the markets for us?
All right, S&Ps, well, we're only trading in the red by $1.25. We had a nice decline. We matched Friday's low at 0875 with the 06.5 print. So that's your key for continued downside. On the upside, let's just look at the close here, 1750. Let's get green and stay green. Crude in the red by $1.33 here. Finally, taking out those multiple highs at $70. You can look at that on your daily charts. The question is can it be made above 70? Gold down $1.80, 1230.90. Silver just hanging out in the middle of 15 handle, up almost 2 pennies at 1552. And Bitcoin survived that big July expiration, and it's only trending down $45 at 81.70. Holding above the $8,000 level. Triple D, how was your weekend?
Interesting. And I'll just tell you, I got a swimming story for you, Joel. I know how much you appreciate swimming here. And I don't know if you've heard of this guy before, but anyway, so I'm sitting just playing with my kids there. I'm at my cottage there, and we obviously have the cottage on the water. And looking out on the water, and I see 4 boats driving real slow right in front of my cottage. And they're kind of in the form of a diamond. So there's a lead boat, and there's 2 on the side, and there's 1 behind. And then I look, and I was like, oh, somebody's swimming in the middle of them. So I'm like, I'm wondering, what that's all about. He's, swimming, and he's swimming at a pretty good clip. So and then my wife looks, there's a little sign on the back of the boat. So she goes and, looks at the sign and looks it up. And it's this Dan Nichols. His name is Dan Nichols. And he was swimming. He jumped. This is at 10:30. He jumped in the water at 5 a.m. from Honey Harbor, swimming 32 kilometers for cancer. I was like, holy cow, is that impressive?
Oh, you're kidding.
32 kilometers. So he swam, and there's rules behind this, like the swim association was there, because we went down to the park where he was actually at the midway point. He could get out, but he had to be out for less than 10 minutes. That was the rule. And then he had to go in and complete the swim. So he basically swam from Honey Harbor all the way down to a park near our house, and then got out for like 5 minutes, had a quick bite to eat, warmed up because the water is cool up here. So it's probably like, 65, 70 degrees he's trying to swim in too. And it was a cool day. It was overcast. It was raining earlier. So it was a cool day to do it too. And then he jumped right back in. So basically the whole swim was going to take over 12 hours. That is just like, I was like, that's so we did a donation. He was swimming for cancer. I can actually post the link of the story about it, but I was like, I got to tell Joel this because you swim. How do you swim 32K in one day? There's the link I just posted in the chat.
Cold water too. That's just, I'll do a little open water, but if it's cold water, I'm out.
How far have you swam? Like, what's your swimming?
I've done
You do
just a mile. I did a mile in Detroit River a couple times. I've done a mile up at Harbor Springs. And that's nothing. That's a half hour, 25, 30 minutes.
Still impressive.
Yeah, and I got a water story for you, too. If you don't see me moving much today, it's because I did over an hour of water skiing yesterday. I'm done. I got to give it. And also, I tried. Do you see that surfing behind the boat?
Yesterday?
Yeah, oh, my gosh. I was up on one run for like 15 minutes.
Wow,
and
Joel.
I just had to drop the rope because my back and my legs and my arms just
they couldn't knock you down, so you just had to finally drop the rope.
Exactly. But
I didn't know you were a water skier.
No, our friends of ours have a boat, and then Lisa got up on the surfboard behind the boat. Have you ever seen that?
Wakeboard?
Yeah.
This is funny. This is so coincidental because we were out yesterday out boating in Georgian Bay, and we go to the beaches, and I know a few people up here. Another guy came on the boat, and he had a wakeboard. And he was trying to get me to go on the wakeboard, and I'd never done it before. And I was like, I should do it. And then my brother-in-law was with me, and he's like, you're going to kill your back, buddy. He's like, you're going to kill your back trying to do that. And you know what? I do have a sore back a lot of times. It's good right now. I wanted to do it, and I was like, I can't, because I'm going to like throw my back out probably doing that. But that's fun. I think it was a good call not to do it, but I wanted to try the wakeboarding because I see it all the time in front of my house. Is it fun? Have you done it?
Well, no. Well, Lisa did it. She's much more coordinated. She did a nice ride.
Is that their first time she's done it?
Yeah. Yeah.
Did she get up right away? It's hard to get up.
She wiped out 3 times, and she was like, I don't know. And I'm like, one more time. And then she got up, and she's super coordinated, and she's the one that's got the coordination. It's hard. It's very hard. But let's start with a little educational piece here, Dennis. Sure. Something you got burned on once before, but you didn't get burned on this time. Let's just talk about that crazy price activity in SIGM.
Yeah. So just to give you background here, SIGM, Spencer, you probably have do you have the headline actually that you could read from when they did the actual, announced liquidation event? Ooh, do you have that headline?
How long ago was that? Let's see. That was, they reported a plan for initial distribution of $6 a share. This is Friday. That headline was Friday, but I don't have anything thinking back to the initial announcement. How long ago was that?
Okay, so anyways, it was stated that the liquidation event, it's a liquidation event, so they're paying out a special dividend of $6. It's the date that was messed up on this thing. So if you look at it this morning, it looks like it's actually doing nothing if you ring up here at 6:10. That is not the case for the last 4 hours because there was massive confusion around when the ex-dividend date is for this special dividend. And I got burned on this about 10 years ago, where I just thought, special dividend is treated like an ex-dividend date. And I can remember selling something short that I thought was ex-dividend, and it was not. And I lost some serious amount of money on it 10 years ago. And that's why I know now there are different rules for special dividends that are greater than 25% of the stock price. So if the special dividend or any dividend, and I think in that case, if it's greater than 25%, the X date actually comes after the record date and the pay date. So everybody this morning had this wrong because they just assumed, the X date was tomorrow, but that is not, or was today, but that was not the case. Show that chart again. Keep it up there for a few minutes because this thing traded down to 95 cents this morning. So some people got absolutely murdered that thought this was X date. And there was, even in a release I saw, not a press release, but on the X dividend calendars, a lot of them had it wrong. I'm not sure, which calendars had it wrong, which ones had it right. But I believe a lot of them had the date wrong. And you can see the thing tanks there, after 4 a.m. open, it opened flat. And then everybody's like, oh, this is X dividend. So they're hitting it all the way down. They hit it all the way down actually to 60 cents. I saw some trade at, but 95 cents and some volume traded too. Well, then you can see just shortly after 6:30, people start getting wind of it. It's like, no, special dividends are treated differently. And you can go to the SEC site and you can see that they are. And they buy the thing all the way back up. I tweeted about it too, saying, because some people have confusion, I was like, no, the special dividend date will come after the record date. So now it's been adjusted. I believe the date is not till August the 15th. But check that date. Make sure it's correct too, because somebody just tweeted that out and I haven't looked, to actually do the calculation to make sure it is that day. But whoever was selling that this morning got burned. Now the exchange is actually looking at the trades and reviewing them. So in some cases, they actually, when the price gets more than 20% away from where it should be, they will bust the trades. So it's going to be really, sad for anybody who was, obviously savvy enough to realize, when it was 95 cents or $1 or $2 or $3, that, hey, this is not X dividend, X day yet. I know the way this stuff works and I'm buying the stock. I mean, just because you're more knowledgeable and, somebody else is selling it down there, they shouldn't be selling it. So I don't think they should bust these trades, but the exchange is reviewing them right now. I don't know if they made a ruling on it yet, but if you bought this thing more than 20% away from the price, there's a possibility that they could actually bust these trades on you, like cancel the trades. So that can happen. So we'll find out. If you get that ruling, let us know, Spencer. But they're reviewing the trades here right now. But just to let you know, X dividends and special dividends greater than 25% are treated differently. So special dividend date comes after the record date and after the pay date. Be careful on these so you don't get burned.
All right, Todd, just back at the $6 level. Dennis, will they bust everything that's 20% away?
They can. It depends on the price, but it goes to review, so it's not automatic. So they'll say, was the news material? There was no material news though here. So it depends. They could treat it as erroneous, but you know why the people were doing it. So they were, you know why they were doing it, because some people thought that this is treated like a normal dividend, but it's not. And the only reason I know that is because I've been burned on it before. And once you get burned on something, you research it and you figure out why. So special dividends, basically bottom line, special dividends greater than 25% of the stock price. Be careful on those because they are treated differently.
All right. Well, thanks for that lesson, Dennis, here. It's something that, there's no free money on Wall Street. Just remember that when you see something like that. And
yeah, because this article from Global Newswire here that Lobster just posted says Sigma Designs today announced that its board of directors has approved initial distribution of $6 to shareholders of record as of the close of July 31st. Distribution will be initiated on August the 14th. So it comes after the pay date. So that would mean it's August the 15th. It doesn't say anything about X dates, but people just look and they automatically assume, oh, well, it's going to be the X dividend date. It's going to be before the pay date and the record date. It's usually the day before. And in this case, it's not. It's after the pay date.
All right,
so probably August 15th is probably the day by that press release, if I'm just doing my math correctly. But check that math and verify it for yourself. But I think it's probably August 15th is the day it'll actually be X dividend.
All right, another busy week of earnings. I think between 900 and maybe over 1,000 companies are reporting this week. Another big week. Let's start with the cat. How'd Caterpillar do?
Caterpillar did well. Q2 EPS $2.97 versus a $2.73 estimate. Sales of a little over $14 billion versus a $13.88 billion estimate. They're also raising their guidance for the fiscal year. The EPS guidance got raised by 75 cents on the low end of the range, from $10.25 to $11. So raising their fiscal year guidance and beating on the Q2 numbers is Caterpillar.
Stock trading up here in the pre-market. It's a nice lift for the cat, up $5. I don't know if I'm getting that excited about it just because he had a lot of overhead supply. Could we get up to over 150? Probably. But I think it gets tougher sledding once you get above 150. So, and I don't like chasing. Again, we've seen multiple times here chasing stocks in this environment just doesn't seem to work more often than it does. And that's why I'm just not a chaser of this rally here on the cat.
All right, looks like you got a seller, someone lurking here at 148, 148.10 is your pre-market high. Pretty good volume trading there, but we're still up near that level. So maybe you take out that seller, clear them out. You have one level to keep an eye on, and that was, let's see here, you popped up, you got a gap to fill, 149.46. That was your high on June 18th. That coincides with those psychological $150 level that Dennis was talking about. Very hard to identify support on this one. Below your last bracket, let's just call 146 minor support.
And Seagate, did we get their report yet?
Yep.
STX.
Yep, I believe we got Seagate with the Q2 adjusted EPS. I'm sorry. Yeah, $1.62. Sorry, $1.62 versus $1.45 estimate is the adjusted number. Sales $2.8 billion versus $2.35 versus $2.8 billion. So in line with the sales number, and they beat for the adjusted EPS for Seagate.
Should talk about the tech wreck on Friday a little bit in context to this. So you're getting a nice pop here on Seagate. There are people who are burned on this though. Burned Friday. So the numbers are okay here. I think you got sellers into this rally, so I don't think the rally holds. It's trading up $1 here in the pre-market. You got all kinds of overhead supply between 56 and 58. So maybe it can hold, but I don't think I think the risk return up here is actually, I think it's a better short up at 56 than it is a buy, just because there's all kinds of overhead supply up here. And you saw what happened with tech stocks on Friday. It was the Momo no day once again, as a lot of them really got burned. I think Twitter was your major catalyst, which could just not catch a bid and kept continuing to leak. And then obviously Amazon gave it all back, which it was up 80 points at one time, basically, almost closed red. And you saw a lot of money come out of the Momos and out of the tech stocks as well. So this kind of fits that bill. It's a tech stock. It's a value tech stock, but it just traded between 57, 58 for so long, has an ugly candle on Friday because of the overall market, gets it back on the earnings report. I think there's sellers into this.
Yeah, I don't know if I want to hop in short in here at 56.
Might be early.
Yeah, it might be early, but if you get anywhere near 57.50, you have your highs from your last two sessions at 57.61 and 57.68. So the longer it, longer it takes to get up there, the bigger fade this will be. I got some good news and some bad news. The good news is I sold my Western Digital a little over a week ago. And the only reason I did that, I was looking at the monthly chart
sold
there.
It, eh?
Yeah, I sold it at like 77.5.
Good sell.
And it just was so heavy. It just, on the monthly charts, it's just like, oh my God, look how heavy this is. And leaning on the bottom. So I'm out of that. I did not sell my Twitter long term. I'm lamenting about that. I do have it still short term, at least till the end of August here. But boy, oh boy, oh boy, the interesting thing I noticed about Twitter is they really reeled people in with that with the pre-market action, because they rallied it all the way back from like 35 to 38. And you're thinking, okay, this thing's going to rally back. Opened at 37 and a quarter and only went to 37.47. So
not much heat.
Yeah, not much heat of shorting off that. Gonna wait. I'm definitely gonna wait until I see like a double bottom or something occurring. Very, very well could be today in Twitter. You're looking at Friday's low was right around $34. We'll see if they can find support around that level today. But
STX already leaking. It's 55.
Already?
So, look at us. We just gave you a point.
Traders. Come on. Who's
Do they like what we say? I don't think it was us, but we had just reported. I mean, it was overhead supply. I think this thing's going. It's actually just ticked red. So we were just up $1.30 when we were talking about it's in the red. So, anyways, Seagate. That's just my thought process here. I like to bet it as a short than a long up at 56, and it's already offered at 55, guys.
All right, let's continue this earnings Monday.
One more just of note here, really. FDC, it's trading up first data. It's trading up $1.30. Spencer, details?
Yep. The Q2 EPS 39 cents is a 2-cent beat on the estimate. Sales 2.448 versus 2.19 billion dollars. They are also raising their fiscal year sales growth guidance by 1% over the course of the fiscal year. So an EPS beat for the Q2 and a sales beat for the Q2 for FDC.
I don't know. Nothing much to say. Well, this has been on a run. So, yeah, it's getting a nice lift here in the pre-market. Again, that Friday was just such terrible trading action for the bulls that makes me nervous to buy anything trading up. And, maybe it's the case that, we're going to buy these things right back and the buy the dippers are going to win again. But I don't know. After so long, it just seems like eventually we're going to get some follow through. We had this a week ago where we saw a little bit of tech wreck. They came right back in and bought them again. That was after the Facebook. Now you get the Twitter follow through. We got a lot of important earnings reports this week. I'll just say that. So I'm just having trouble buying anything here. So FDC is trading up $1.30 in the pre-market, but I'm having trouble pulling the trigger to buy this one too.
Did they do a reorg or something? Because I thought this stock, wasn't this a much higher price stock at one point? Dennis, do you remember that now?
Maybe.
Yeah, there's something or a big split or whatever. But anyways, trading at the highs of the pre-market session, 24 even as your pre-market high, hanging up here at 23.95. So at this point, not willing to give in, not a lot of volume trading. I'll just alert our traders that 3 days ago, the stock made a new all-time high at 23.35. as well as the all-time closing high price at 23.31. So if you do go into reverse, look for that area to be support. Friday's close way down at 22.62. As far as resistance, there isn't nothing. The stock bases, this information I have breaking out to new all-time high.
Let's go over to the ratings parade. There's a couple interesting ones to talk about here. Let's go to AT&T first. That is catching an upgrade here and has been higher. It's been an ugly it's been ugly for a long time. I mean, AT&T really, but it's been an ugly 2018. Stock started the year around $38. We're down at 31 here now. We almost tried to breach 30. We could not. We got down to $30.13. Then had a nice candle on Friday. You know, it was again the trade from growth to value. AT&T deemed as more value, dividend play, defensive, and they saw that come out in the chart on Friday as a nice day when a lot of other stocks, the Momo names, were having money come out of them. Stocks like AT&T were having money go into them. So now you see AT&T trading up 40 cents in the pre-market. Well, that's thanks to Bank of America, because they are upgrading the stock this morning to a buy with a price target of $37. Joel, thoughts? AT&T, I still have my invest portfolio, but it's such a small position. I'm probably going to dump this one. I've been talking about it for a bit. I need to just actually go in there and sell it because I just don't want to own it anymore.
I can't say a whole lot about AT&T as I am I'm long AT&T. And
I am. Oh, you're long for a trade though.
Yeah, I'm only in for a trade. I actually picked it up on that ugly day when it went down.
You are good.
Yeah.
The bottoms. What price did you buy this thing at?
Well, I ended up going just with the 30.5 calls because
you bought calls.
Yeah,
nice. What were those going for?
I think I got those for 45 cents.
How long out?
August. I went all the way to August, man.
I was time. You're working with it.
Yeah, well, and then I liked the price action on Thursday where it didn't take out. I really thought it might test 30. I was really preparing for it to tick 30, 29.99, but there was just such a big volume day, a big red candle day. Stock was really strong on Friday, so it was a little hard for me to hold on because the market was weak. But now you got the upgrade here. I think I'll just let it breathe here for a couple more days. And but I don't know. I've been bullish since 36, so it was at 30, 33. So I took a shot on it.
Were you bullish? You weren't really that bullish.
I don't know. I mean, like the dividend. You know,
I like the dividend too. Yeah, I've been in it since 36, so that's even worse than bullish because I've still been long the thing. But I've actually been bearish since 36, but I still own it for some reason.
Well, you've owned it forever.
For probably 10, 12, maybe 20 years even, actually. It's one of the first stocks I've ever bought was AT&T. I bought it so long ago, like I said, when they did that, spin-off of AT&T Wireless, and they paid me a special dividend. They did all kinds of funny stuff back, I think it was like 2006 or 2007. I actually held it all from there, and I had AT&T and Wireless for a long time, and then that, I believe, got bought out. So I probably up quite a bit considering, all of that. I don't remember where I can't remember. Like, I think my original cost basis, believe it or not, AT&T was like 55 or 60 bucks, but it was all messed up because they did the spin-off, they did this, and then everything adjusted, right? So because I got AT&T Wireless, and I think I got paid like a special dividend of like, I don't know what it was, $6 or $8, and I got another company. So I got I ended up with 3 different stocks plus a big dividend payment too. So then that adjusts your cost basis and it gets all messed up to trying to figure it all out. So I'm not even sure what my cost basis is. When I go to actually sell this, could be a tax nightmare because I don't even know what my cost basis is because you're supposed to adjust it for all that other stuff you got. So maybe I'll talk to an accountant and try to figure out what my cost basis is on my AT&T because it's not what I bought it at. But anyways, then I got paid a lot of dividends over the years. But you know what? Been in this party a long time. I just think that the business isn't as sound as it was 10 years ago. And that's just because it's loaded with debt. They keep doing these acquisitions of everything. They're trying to find growth. It's not growing. Everybody thinks it's a bond, but is it really a bond? Is it safer than a bond when you got a pile of debt there? I just don't want to get GE'd on this. And that's why I'm thinking about dumping my.
Yeah, and I bought it for no other reason than just bottom fishing. I thought it was a blowout day on, the killing on the earnings like that. So, this is nothing, no great assessment of the financials of the company. This is just picking out a chart you like, finding support, taking a position. So, the chat's going nuts here over AWX, Dennis.
Oh, I'm going nuts over AWX. This thing has been on a 5-day tear. So here's a stock. Spencer, you got a backstory for this? Because I knew nothing about this stock before Friday when everybody was talking about it on Friday because it went from like $6 to $10. I come in this morning and it's 35 bucks. So what is there a backstory here? What's going on with this AWX? I've never even heard of the company before Friday.
This is just your classic low float play. There's 3.19 million shares outstanding.
So what happened? Was there some catalyst? Did they
there was a filing.
catalyst.
Yeah, there was a file. Well, someone this was after hours on Friday, so obviously someone got the memo on Tuesday, Wednesday, and Thursday.
What happened?
It's to me, it doesn't sound that significant. A Form 3 filing after hours on Friday shows MIT Broker International owns 1.9 million shares of this thing.
Not significant in any way.
Well, it's significant because there's only 2.3 million out there.
One company owns the bulk of it.
Yeah,
that's true.
Yeah, that's.
You got to watch these things, and I don't know the story here. Chili's saying it's a long story, so Chili, if you can enlighten us too, let us know. He's saying, so he's saying someone bought 85% of the float and it's running up. So that's basically what we just said here too.
Yep.
Can these things continue here? I mean, these stories get hot. These low float, we've seen it so many times. These low float stocks blast off in the orbit for a week or two. They get hot, and then the bubble bursts. They get Citron, whatever, and they come back down. You look at them 2 months later, and they're back to where they came from. I don't know anything about this story. I'll just say it seems like 9 out of 10 times when you look at a stock that went from $2 to $33 on not really much, just because it's a low float. When you look at it 3 months later, it's usually back to $2 or $3. The problem is probably hard to borrow.
Yeah.
The other problem is, can you hold it that long? You're 10 now, you're 33, you're getting murdered here. So it's you can't just say, oh, well, if I sell at 33, what if it goes to 100 on you? I mean, so that's why I'm usually hands off on this stuff. But I'll tell you, if you're a long-term investor and you're like, I think this is going to really keep going. If you stick this in your long-term invest portfolio at 33, in 2 months, I think you lose money, and I think you lose the bulk of your money. So if you were in this, trade it, as you want to trade it, but don't get stuck holding this, and a lot of people, this is how they get burned. They're like, oh, I bought it 35 and it's 25. I can't sell now. And they look at it 2 months later and it's $2-3. And it just, lost, almost the entire investment there. So you got to be very careful. This stuff is for trading, not for investing. And I honestly think when the dust settles here and you look at this probably 3 months later, I think it's back down to $2 or $3.
We don't give any direct advice here, John. I'll just tell you, if I was long, I would have been out long ago.
Yeah, we would have been long.
I would have been out. I would have been out at whatever, when it took out Friday's high or whatever. I mean, just keep an eye when stocks get like this. Just keep an eye on the 15-minute chart right here. Right now, you got a 36 even high. You've backed off. So I don't even know if you can borrow the same. I don't even know if there's a float on it or whatever.
I would almost guarantee you can't borrow.
But before you buy it here and take a long-term position, but Chili Trader, just look at the charts of the two stocks that he posted, MTSL and GBR, and then, decide if you want to put it in your portfolio here. S&P's hanging out around.
You went on a tangent there, Joel. We're talking AWX now. You're talking about putting something in your portfolio. Better clarify. I'm not putting AWX. I'm going to say the one thing on this show is I think it's a big mistake to stick AWX in your portfolio. I know you didn't say that, Joel, but it sounded like you said it.
He said, if you're thinking about it, take a look at two other stocks that this company was involved in.
What was it? Well, give me those two.
Those two are MTSL, Michael, Tom, Sam, Larry, and GBR, George,
there you
Boy,
go.
And Robert.
Great point here. So GBR went from 2 to 12, and it's back to 2. So there you go. This is probably, I would think, there's a good possibility this is what the chart is going to look like of this AWX in a month and a half or so. It's going to look like this big, huge spike. We don't know where the top of it's going to be. It could be 35. It could be 55. It could be 100. It could be on its way down here now. We don't know where these things stop. We just know when the dust settles, you look at a month later, they tend to go back to where they came from. So that's not advice. It's just saying that usually if you're buying these things up here and holding them for a month, you're usually going to lose money.
Hey, Dennis, I don't want to bring up a sore issue here, but Matt and Beyond wants to know about your PayPal here.
Yeah, I bought a half position on it, and you were saying you're never convicted when you buy a half position, and I wasn't. Am I going to buy more of this? Maybe if it pulls back to 80. I might buy more. I always have trouble adding to losers, though. It's like I come in with a half position, say I'm going to add to it, and I never can pull the trigger. I mean, I've wanted to do it on Micron, and for whatever reason, it's like the trader in me just stops me from adding to losers. And I got this dead wrong. I mean, I bought this thing before the whole Facebook debacle. PayPal reported. Facebook reported Facebook was fine and was trading up at 205. And then obviously they did the growth thing. And then I'm in PayPal. I probably should have turned around and sold it, but I had stuck this in the long-term invest portfolio because I thought it was going to 100. I think it's still going to 100 eventually.
Like, why do you think it's going to 100? Like,
I don't know why.
That?
I get stuff in my head, Joel. I don't know why. I don't know why. I think it's still one of the loved ones. Its valuation is not insane. I mean, I think it's trading 26 or 27 times. It's high, but they're growing pretty well. And you know what? My problem, in my portfolio is I just don't have a lot of growth in there. It's such a value invested portfolio that sometimes, I look and I was like, I've liked this company for a long time, but I probably, got this one wrong. So, anybody who's bought this is, obviously got it wrong. I bought it at $89 on Thursday night, right before the Facebook debacle. So I've obviously got it wrong. I'm down at 85. So I'm looking at it. I almost want to just cut the loss, but I think it's going lower here. So I think it's probably going down, maybe eventually to $80 here, but I might add more there.
Do you use PayPal?
Long term, I still kind of like the story though.
Do you use it?
Yeah, I have a PayPal account. Do you use it?
Remember they own Venmo too. I use Venmo all the time.
I think PayPal. I like the story. So, and I don't think the valuation is insane. I think the valuation is high, but I don't think it's insane. Like I don't buy in insane valuations, so I don't buy Netflix and stuff like that. I can wrap my head around this valuation, and I like the story. So that's why I had it for my portfolio for a long time. I just sold it, and I wish I would have never sold it. And then I rebought, and so I've kind of messed this one all up too. So maybe don't follow me on PayPal. Certain stocks you just can't. You do a bad job on. This is one of them that I've done a bad job on, and I'm in from 89 on Thursday. Obviously a mistake.
Abner's boys just asking. It's kind of self-explanatory, but Dennis, what's the difference between a position and a half position when you're going long-term in your portfolio?
Oh, it's just I'm not fully convicted. I'm like, I kind of like the story. I want to participate, but I'm not fully convicted to go, all in on full position. So typically I have a dollar amount that I typically invest into a stock when I'm putting in my investment portfolio. I kind of have that in my trading too, to a certain extent, but my investment portfolio, I kind of have a set dollar amount that I like to enter with. And if I go in a half position, it means I'm entering with about half the amount that I normally would. With Micron, I did it originally as a third position. So with the intentions of buying, not only was buying again, but buying two more times. And obviously it's pulled back. I bought Micron at 60, but I wasn't convicted on the time. But I wanted to participate if it kept running. It pulled back to 50. I said I would buy more at 50. I never did. So I should have. If it comes back down there, I might though. I still might. It's still on the radar to do it. But PayPal, half position. So I was looking to buy more if it pulls back, kind of like the whole Kramer thing. So hypothetically, if it pulls back to 80, I might put it into a full position. So I might buy the other half that I was intending to buy. So it's a cautious way to invest, I guess.
Yeah. And when you do that,
trading, I never do. On trading, I go in or I don't go. I don't go usually half positions on trading. Usually I'm in or I'm on my dollar amount or I'm not in. But on investing, sometimes I'm wishy-washy. I'm like, I kind of like the story. I don't know what to do. Maybe I buy half position. It's the same thing when I'm selling. I'm like, well, I kind of want to book the game, but I don't know what to do. I kind of like the story still, so I sell half. You ever do that? You do that too, Joel. Don't you sell
half? But usually when I'm in, more on the selling end, more into the buy-in, and then kind of parcel out of it. With the AT&T, I was prepared for a retest of 30. I didn't know if it, I would actually have bought more there, but I went in with a full position, and I guess it'd be a full position and a half if it went down to 30. Dennis, let's see here. 8:34. Before we do anything else, we got a guest coming on at 8:35. You want to discuss any imbalances here in the market?
Go take a look. I haven't looked myself yet here. Is there anything jumping out as Twitter 50,000 to buy? It's going to be a tough sled though, because you got so many people that got burned here. These things just typically don't go straight back up. Even in the case where they bounced the first day at Netflix, look, it's come right back down and it almost wants to retest those lows. It seems like when these stocks have these whooshes, they usually give you a second chance, and Netflix is giving you that now. I mean, Facebook is still trying to hold on to those lows, but it almost looks like it wants to take out the lows of the move, which it did briefly on Friday. I don't know if I'm jumping in here on Twitter too. I know it's popping up, but 33.90. I think the path of least resistance, at least in the short term, is still down. I don't know if it's going to test $30 or not, but it's turned here, and there's a lot of people that are burned, so it's going to be tough sliding to come back up. So, but this morning has 88,000 shares to buy, which is helping a little bit. Geez, sell balance every day, 119,000 to sell here this morning. You know what? They're really small. Coke 74,000 to sell. Square 50,000 to sell. That's of significance. I don't really see much else. It's pretty small.
All right, let's take a quick break and grab our guest, Chuck Self. He's the CIO of iSectors. We'll be right back in a moment. Welcome back, everyone. PreMarket Prep. Spencer Israel, Joel Elconin, Dennis Dick with you now, joined by Chuck Self. He's the CIO of iSectors. Chuck, how's it going today?
It's going great. It's a beautiful day here in Wisconsin.
Where in Wisconsin are you?
I'm in Appleton, Wisconsin, 30 minutes from Green Bay, and the Packers have started practice.
Oh, so it's all right. It's happy season now. Everyone's happy.
Yeah.
All right.
Yep. The town wakes up.
How are we looking this year?
Oh, and in fact, the trivia I'll give you is that when your visiting team comes and plays the Packers, they stay in Appleton because we have the biggest hotel in the area. We have a bigger hotel than even in Green Bay.
Joel and Dennis, we got to have a company trip out there, a team trip, team bonding out in Appleton. Let's get to the markets, Chuck. I'm pulling up a chart you sent over on the TLT. What exactly are you watching with regards to the TLT right now?
Well, we're very top-down oriented, so we're kind of our balance to the type of work that you guys do. And we really think that the economic growth is rolling over. One of the things that we believe in, and we got this idea from David Kelly at JP Morgan, is that the market is monotheistic in that it only believes in one God, and that is earnings growth. And when earnings growth starts to slow, it could still be growing, but when it's slowing, that's when the market starts getting into trouble. We think the second quarter is the top quarter for GDP. And of course, there were special things like 1% came from soybean exports that the soybean farmers exported before the tariffs, came to fruition. So we think that the surprise in the second half of the year is going to be that economic growth, although positive, is going to slow at the same time that the Fed continues to be aggressive, relatively aggressive in raising interest rates and lowering the balance sheet. This is a recipe for the yield curve to go negative before the year ends. And as that happens, you're going to want to be in longer bonds. So the chart, I'm no chartist, so other people will be able to tell me more that I can see. But what I can see is that low at 116 is probably going to be the low. And the question is, can it go above the neckline in the 122, 123 area? And so we think that there's maybe 1 or 2 points as far as risk. And if it breaks through 123, this is a 10% the potential move. In our all equity portfolios, we have 25% of the portfolios in this position.
All right, moving on to let's look at VPU you sent over. This is another ETF. What exactly? This is the Vanguard Utilities Fund. Break down the VPU for us.
You may recall when I was on 3 months ago that I gave a good story, I think, for utilities, and that they had been beaten down so much. And obviously, we've seen them break out. This one breaking out over 115. We think we're going to have higher highs and higher lows on this one. And of course, this is correlated with the TLT idea in that they pay a great dividend. You're able to get that while you wait for the price action. And these sectors have have been hurt over the last few years. If you look over the past 5 years, the S&P 500 is up 66%, and utilities are up 33%, while technology is up 126%. So it's a value sector. I heard, I don't know if it was Dennis saying that his portfolio is more value oriented at this time. We agree that you want to be value oriented, and the good news is that even with the interest rates rising over the past week or so, utilities have hung in there. So we think that there's going to be a strong relative momentum there, and it's going to be a great place to hide for investors.
What about the banks? Because they've had a nice run here in the last month. I mean, look at JP Morgan. It got down to 102, almost in the 102s in July, just literally 3 weeks ago. It's up at 116 here now. Bank America's had a nice run. Now, can this run continue here, or is this a run that maybe you'd be taking profits into?
Well, it's interesting because I was debating on whether, as you know, we invest in sectors. And so I was debating whether to put up FNCL. And if you want to put it up FNCL, you can. Again, everything you said is right. And it's happening at a time when the yield curve has become flatter. Usually that's negative for banks and financials, because that means there's less spread that they can earn between what they have to pay out and what they can pay. Well, two things are happening. One, I don't know if you looked at your checking account recently, but my checking account yields are not going up. So they still are, especially the regional banks, are still able to fund their loans at pretty low rates. But the other thing is that because the economy is growing, they're making it up on volume, shall we say. And trading has also, when you looked at the earnings numbers, were good. So we are long FNCL. We think that they're going to continue to earn good spread on the money lent, and then probably the most important thing, of course, is regulatory reform, and that's part of the reason why the stocks have done so well. Is that Dodd-Frank has had an arrow shot in it, and now they can increase dividend payments, they can do share buybacks, and investors again have taken a sector that, as you can see for the chart for the year, hasn't done that well, and it has the possibility of maybe breaking out here.
We're on the line with Chuck South. He's the CIO of iSectors, calling us from the heart of Wisconsin this morning. Chuck, I have a question for you. I mean, you manage money for different people, different stages in their life, different, long-term, short-term. They're coming into your office and you're talking about investing in utilities and things like that. And there's Facebook, there's Amazon, there's FANG, there's all these fantastic stocks. I mean, what do you, especially for some of these younger people, what do you say to them when you say, yeah, boy, I'm looking at utilities and I'm looking at these things with dividend? What do you say to them?
Well, it's interesting in the psychology, outside of the very youngest people, everyone still remembers 2007 to 2009. It's still in the back of their minds. And we've had more people come in and say, I've got all these gains and I want to make sure I don't lose them. And when people say that, then obviously that fits into the way we invest. And I think the other thing is even if they already have some of the technology stocks and the big winners, everyone's looking. Not everyone. Everyone should be looking at diversification, and especially for investors, it's likely that most people are not as diversified as they should be going into a slower economic growth environment where the Fed is being aggressive. And so we have no problems telling people that, and people pretty much accept it. The few people that don't, of course, will probably end up going elsewhere, but that's okay. That's our style, and we want to protect people on the downside whenever that's going to occur. We're not thinking the market is going to be going down anytime soon, but it's always the case, and you guys are veterans, that it always goes down before you think it should.
All right, Todd, let's just talk about the energy sector here. Wild ride in ExxonMobil and Chevron Corporation on Friday. Chevron, very impressive day. Rebounded, closed up today, trading higher. ExxonMobil, rough day, trading up 37 cents. Crude trying to bust out over 70. Is the energy sector something that you're looking at here as a more conservative investment?
Yes, and I didn't send a chart over for VDE, Victor David Edward, but that's what we're in, and we're again long that position. It's really an amazing chart in that you have the last 3 months or so in this very tight trading range there, and of course it came off the lows earlier this year, and oil has gone back and forth. The fundamentals on the oil side is certainly too much demand and not enough supply. But the news has been very mixed as far as whether the Saudis are going to continue to keep supply relatively low. What are the Russians doing? What can the Russians do? Are we actually going to allow Iranians to export or not? You know, the news is very mixed, but we think the fundamentals are there for a good energy run, hopefully breaking out over 110 on this stock, and so we are long this stock.
Chuck, you sent over a chart of the VNQ, the Vanguard Real Estate Fund. Why are you long real estate? I've been reading the headlines about, the market's topping out. We're turning over finally. It's taken a decade, but what appeals to you about VNQ?
Well, the VNQ is obviously the most controversial long that we have here. Even with all that news, as you can see, it has done well here in the last 3 months. When you look at the days where the defensive stocks do well, VNQ tends to be at the top of the sectors. Again, this is the quintessential climb the wall of worry sector, in that there's all this bad news, but underneath, especially when you get away from retail, the fundamentals are still quite strong, and so it's hard to get apartments if you're trying to rent. You're paying more and more for apartments. Industrial space, especially warehousing spaces, is very tight, and the office market in most markets are doing quite well. And remember, B&Q and these REITs are all commercial real estate for the most part. They have nothing to do with the home building side of things or the home selling side of things. So we think that again, we've been seeing higher highs and higher lows in this unloved sector, and we think that there's still a great place to hide there. And again, because it's REITs, you have the 5% type dividends that you could count on while you wait.
All right, Chuck Self has been on with us. He's the CIO of iSectors. Chuck, thanks so much for the time this morning, and have a good one.
Okay, you guys do too. Thank you very much.
All right. 8:49 now. Got about 10 minutes left in the show. Dennis, did you say that we had some busted trades?
Yeah, $4.88. All trades at or below $4.88 in SIGM were busted. So this, what I hate about when you're busting trades. Imagine scenario where you bought the stock at $3 and sold it at $5 this morning. You think, I made 2 points. Awesome. You know what happens? Your buy is busted $3, and now you're actually short from $5 and you're down $1.10. So you're coming in here, you're like, how is this possible? I'm actually losing. I'm short now from $5. Short basically illegally, because you would have been a flat out sell. It wasn't even marked right. And now it's at 610 on you and you're losing $1.10. I mean, that's just the horror story of how, when you're busting trades. I don't think they should ever bust trades. But, I get it. People are misinformed, so they want to go protect those people. But in any regard here, that is what has happened here now. They've busted all the trades below $4.88. So if you're buying this at 95 cents this morning, sorry to give you the bad news, but those trades are going to be canceled on you.
And I mean, you could have sold it at $3. Well,
and that would have been canceled too. And that would have been, and that would all have been canceled. You would have been net out. But the horror story comes, let's say you sold at 489. Well, 489 is good. So your 489 sale is still valid, and you will still be, you will be short from 489, and the stock is at 610. I hate busting trades, especially if you don't know how it's special dividends, this is the hard way to learn. I learned this the hard way back in the day. I think I lost 50% on the thing. They didn't protect me back in like 2006 or 2007. I burned. So now they're trying to protect certain investors, but they harm other investors. So this is the savvy one that actually realized, that this is not the special dividend, gets punished for it. I think it's brutal. I think that it's brutal when they come in and start busting trades. I mean, if you don't understand what you're trading, don't trade it. So if you think you're the informed one and you think it's ex-dividend, you better be sure. And I'm telling you, it's a good educational point here this morning. Special dividends greater than 25% are treated differently, and the ex-dividend dates are after the record date and the pay date. So remember that, guys. And some people learned that the hard way this morning.
Dennis, I'm just going to call you Andrew Left here as you were talking about AWX at $35. Jen Peter notes the Google chat that it falls after you guys initiated coverage, but I'm sure that's
we did not initiate coverage. I said a little bearish rant. It was at 35. It's at 25 now. It was all me.
What are you doing at 25, Dennis? You buying?
No. No, I won't. I already said I'm not participating in this today, but I'm not buying at 35. I'm not buying at 25. I'm not buying at 15. I think when the dust settles, and we look at this in 2 months, I think it's under $5.
My
opinion.
SOGO. Remember when this stock was the flavor of the chat here back in mid-June when it ran up, and someone say, what's happening now? And it's just like reality setting in here. I don't know what the particular news is here. Now you're down under the $10 psychological level here. You're below 972. I mean, what's the news on this thing this morning, Spencer? This thing is getting walloped.
I think all these stocks are weak this morning. They had earnings. My bad, I missed that. That was it. Yeah. So
this is significant. This is down 10%.
Yeah. Okay.
11%.
So
the earnings.
So I go to earnings. Q2 EPS 8 cents, beat by a penny. Sales 301 million versus 304 million. Q3 sales guidance. Either it doesn't compare or it's a huge miss. The estimate for the Q3 sales guidance was $337 million. What they actually said was $275 million to $285. So they missed it. If it's comparable, they missed the estimate on the sales guidance by $60 million.
High multiple stocks, high growth stocks, when they're lowering or missing on their guidance, they hit them. And this chart's broken. I mean, all these charts, these were fun trades back in May and June in the chat. Spinner, I don't know where Spinner's been. But, these guys were all over this. And this one, I think Spinner was the one that brought us this one. So thanks, Spinner, if you're listening there. I know you're out there somewhere. It went from 10 to 15. We had a good run with it. I actually participated. And I had bought this at 10 and sold some at 12. And I sold some more up in the 14 handle. So, and then it broke down. And I was even, I was on the top of this too. I was like, I think all these charts were broken. They all kind of were moving together. IQ, HUYA, BILI. These are all broken now. I mean, this story is over, at least the hot story. And now it becomes difficult because a lot of people burned on these. These things get hot for a bit. They're trades. And, when they turn around and the dust settles, they're starting to come back to where they were. I think when you look, I think the IQ story is broken here now. I think the HUYA, it's still trying to hold on. I mean, there's still arguments here. But I mean, BILI is back way below where we were originally talking. When we were trading it from 14 to 16 to 18 to 20. When they're going, when the trend broke, that was it. So I look at IQ and it's kind of meandering here now. But until this thing can get back about like $38, it's kind of dead money. And I think if it takes out 30, Katie by the door, this thing could be at 25 or 20. So I'm not a fan of any of these things right now, especially, after I just seen with Sogo here now down to $9. They're all broken. These charts are broken.
If you're short or if you are brave enough to try long in this one, folks, going back to May and really early May, late April, you had a bunch of lows. I'll just read them off. 833, 848, 848, 844, 845, 848, 850. 874 was the highest of those tops. So let's see what happens here. I would not want to be a buyer in the a seller in the 850 to 870 range. See if shorts want to come in here and cover. Dennis, we got a little bit of debate going on AMD here in the YouTube chat. I mean, what a reversal on Friday. They ran this thing to 1988, not close enough.
Just under 20.
Just under 20.
The big psych level.
Yeah, and then you go to 1831, and then boom, you rebound all the way up, then close at 1894. Trading up in the pre-market here. If it got anywhere near Friday's high, oh my gosh. Yeah, you think the top's in?
Opinion, just an opinion. We don't give advice on the show. I think the top is in AMD. I think 1988 is the top. My opinion. I don't think you're getting through it. Maybe I'm wrong. I haven't, done trade AMD well, so it's just an opinion. But I think the top is in, and I completely agree with you here, Joel. I think you were going to say if you get anywhere near 1988, I think you're ringing the register, in my opinion. So I actually like it from the short side up here.
And if you want something else
stopping
to lead
out
on,
above 20 though.
Yep.
So if I was to short it, just to finish my point,
sure.
If I was to short here at 1932, I would stop out above 20. So I think I like it as a short up here, but with stopping out, if it makes new highs, that's going above 20, I want no part of it. So I would stop out above 20.
As usual, AMD's throwing some volume around your pre-market high is 1947. I think after that kind of decline, and now you're coming back up, sellers may step down from 20 to 1950. So taking a look at that pre-market high, 1947, is a potential short in the markets here. All right, we got about 3 minutes left.
We have a couple from our chat. We have a couple
ratings. Go ahead.
A couple from our chat that I want to hit on before we go. One of them, someone asking about NEE.
NEE?
NEE.
It's a utility, right?
Yeah. We trade everyone. So that's a utility. It's a big one. I think it's the number one component in the XLU, if I'm not mistaken. It's right up there. Anyway, so yeah, this is a utility stock. I mean, just look at the XL. You can look at that chart. Similar. All these utility stocks kind of trade together. It's had a little bit of a lag, maybe at earnings or something, but I mean, overall, these things just all move together. So 170, major resistance.
And then
I would just say major support too, Dennis. I see a trio of lows here right at 166, 66.22, a double bottom 66.51. So that's your major support. Want nothing to do with it under 166.
Someone else asking.
And also DBX. Somebody wanted to know about Dropbox before.
Oh.
Yeah. We know I was playing Dropbox for a long time. I was hot back in June. I'm just going to say, you get hot, and, I'm a little bit cooler right now. So I haven't had some good calls as of late, but I bought this thing at $32 and I sold it up at 41 or 42 and 4 days later. So I actually took almost the entire ride. Actually did play the short side for a point, but I should have held longer. I mean, I look at this chart here and there's all kinds of support at 29 to 30, but it's been hanging out here too long. And when it hangs out here too long, I think it breaches it. I think this actually is going lower. So just my opinion. But if you're looking at, I like it better as a short than a long here, even though it's on support.
And then somebody asking about Harley Davidson. They announced their growth plan through 2022 this morning, which they're going to fund through cost restructuring. They said that over the next 5 years, they see revenue increasing by more than $1 billion. Good luck with that.
Hog, you're talking?
Yes.
I don't know. It had a big pop off earnings, kind of been leaking a little bit here. It's got the dividend 3.33%, but I'm not investing in motorcycles, not at this time. So I'm out. No hogs.
Driverless motorcycles is what I'm looking for. Look at nice pop up here, flat. A lot of highs here at just above 45.5. 2-day high 45.87. 3 more highs above 45.5. So leaning more towards a sell than a buy in that issue.
So we got 30 seconds here. Just quick thoughts. This is a tricky day. I mean, we're just kind of hanging out, but we did have a bit of a tech wreck on Friday. I think you got some nervous Nellies out here. So I wouldn't be surprised to see some follow through weakness in some tech stocks. We're not really seeing it yet here this morning. It is early, but I would be cautious here if I was buying tech stocks because that was an ugly candle on Friday. I think you could see some follow through here this morning. So where we go after today, or where we go, it's always difficult to call. But if I'm trading here, I'm looking at bounces to sell really in the tech stocks as opposed to dips to buy.
For me, looking just short term here at the S&P futures, just hanging out unchanged. We've had a nice 10, 12 point rally off the move. So the longer the spoos can stay above that 1750, a little more chance of a rally. I would kind of like to see it get into the middle, 28.20 handle. I got a nice resistance level at 28.25 even. So I'll be looking at perhaps a lower risk short at that level. Coming back on the downside, folks, we bounced nice off Friday's low. That turned out to be the weekly low, coincide with Tuesday's low. So let's just call 28.10 your major support. So that's it, Spencer. You want to wrap up today's show and preview Tuesday's show?
Yeah, sure. On tomorrow's show, we're going to be joined. Nick Shaheen is back with us after his vacation. We'll ask him about that and get his big options trades for the day. We want to thank all of you who joined us in our chats, both on YouTube and premarket.benzinga.com. Thanks to our guest, Chuck Self. Here's a disclaimer I haven't read on the show in like a year and a half, and I'm going to read it this morning. Please remember.
We should read that. It's on the show. It's there. We used to read it every day.
I used to read it.
Reading this.
Yeah. Please remember that all the information, material, and content from our show is for informational purposes only and not meant to be investing advice. But as they said, that's going to be it for us. Hope you guys have a good rest of your day. Hope you have a good evening, and hope you join us again on Tuesday. Have a good one.